You're listening to the 10 Bagger Podcast, presented by the Daily Gold. Join us as we uncover tomorrow's 10 baggers today. And now here's your host, Jordan Royburn.
Hey everybody, welcome back to the second episode of the new 10 Bagger Podcast. And with me here today is David Erfle. He's also a friend of mine. You can find him at his website at juniorminerjunky.com. He's the editor and publisher of that service. Hey Dave, thanks so much for coming on. I really appreciate it. And how are you today on this Friday afternoon?
Oh, great, Jordan. Pleasure to speak with you. Looking forward to sharing our knowledge on possible 10 baggers here.
Yeah, my first question, Dave, is, I know that you like to have stop losses for your positions. But do you invest any differently if you find something that you think has that real exceptional, like 10 or 20 bagger potential? Would that cause you to maybe be a little more liberal about using the stop loss, or is it just all the same for you?
Oh, yeah. But as far as stop losses are concerned, they're pretty much mental. And my stop loss rules are different for whatever climate we are in the sector. I mean, right now, I believe we're forming a bottom. So I'd be a little more liberal with stop loss rules. But yeah, absolutely. I mean, if you're talking about optionality plays, there's a few right now that are very, very, very cheap. If you believe that the gold price is going to have a solid $1,500 floor here within the next 6 months or so.
Yeah, you mentioned optionality, and our mutual friend, Nick, the mining book guy, he mentioned that to me, which was so interesting, how you can find 10 baggers. Like, you don't just have to go to ground floor exploration. Like, you can find them with producers and even optionality plays. So do you think going forward, like let's say over the next 12 to 24 months, the best chances for a 10 bagger, would you look at exploration, optionality, or a growth oriented producer?
Well, I would be looking at a developer that's close to the finance stage, that realizes that they are an optionality play, and that means keeping a tight share structure, not rifling through their cash by wasting money on drilling. I mean, if they've already got a huge deposit and they're at the finance stage, they realize that all they need is a higher gold price. They don't need to keep drilling to prove up more ounces. So if you find companies like that, absolutely. I mean, if you find something that's got 3-4 million ounces with blue sky potential, it's in a great jurisdiction, it's got a really good share structure, and a management team that understands that they are an optionality play. That's the key, because a lot of these companies, they just rifle through their cash, and even though they have a large deposit, they think that they can find some high grade and make it better and just keep spending money and diluting shareholders. And by the time that the gold price does have a solid $1,500 floor and maybe their project does become attractive, their share structure is blown, which will limit the upside.
Yeah, that's so important. Now, can you think, with what you just said, can you think of, I don't want to ask you about examples right now at this point in the interview, but can you think of going back to the last cycle in the, let's say the 2008 to 2011 period? Is there anything that jumps out at you, like an example of that because of the great move in the sector, it went from development to become a 10 bagger? Is there any example of that comes to your mind?
Sure. Not sure if it was a 10 bagger, but just off the top of my head, Exeter was one. When they got bought out by Goldcorp, and they were an optionality play, but I remember they also had a spin out they called it Extore. They spun out one of their properties, and that one went up. I think it was a 20 bagger once they spun it out. And so that's one example I can think of. Yeah.
And speaking of examples, we were sharing war stories about our past and would-be 10 baggers. and that sort of thing. Maybe you could just share some of those examples of maybe one or two names that were successful 10 baggers for you, and then also ones that you happened to miss, you sold too early or you didn't buy that became 10 baggers.
Oh, sure. Recently, my biggest 10 bagger win was Novo Resources. I've sold two-thirds of that position near the top, and I've maintained my 1/3 position in that stock. And the big one that got away was Kirkland Lake. Yeah, we were discussing this one. I just have to laugh at it now because once Kirkland took over New Market Gold, well, first of all, I can go back a little farther. I was a Crocodile Gold shareholder, and then New Market took over Crocodile Gold, and that gave me a larger position. And then at the time, I had a position in Kirkland Lake and New Market when that merger took place. And I sold, I think I sold maybe a half of the position because it was just so large and I'd done really well. So I said to myself, okay, I'm going to keep this many shares and we'll see what happens from here. But as you recall, the market hated the merger and the sector was really going down at the time. So I thought to myself, okay, I'm just going to go ahead and sell it, take all my profit, and then I'll just get into it later. Well, that decision cost me quite a bit of money left on the table. But like I said, you just got to laugh at those stories because you live and learn, and we've all got a few of them.
And what about that one with the warrants? Because I know with Atlantic Gold, that wasn't quite a 10-bagger for you. I think you told me that was an 8-bagger for you. But I remember you, and this was 4 years ago, we were talking about the warrants, how those looked appetizing. If you would have held on to the warrants, how big of a winner would that have been for you? And what ended up happening there?
Let's just say it probably would have been a 7-figure win for me if I'd have held on to those warrants. But the funny thing that happened was I was loading up on those warrants. I think it was 2014, 2015, somewhere around there, and the sector was just getting crushed, as you're well aware. But these warrants looked really attractive. I really liked the project, and I liked the management team, and they were like a penny. And so I accumulated about 1 million of them, somewhere around there. And then the brokerage firm that I held them in, which was Penn Trade, was going out of business. So it was, like I said, it was a brutal bear market at that time. So I said, well, I guess I'm just going to sell them all. And then maybe I'll just buy them back later in another account. And I never did. But at least I had the shares, and I kept the shares. And that was an 8-bagger win for myself and my subscribers. So I'm happy about that. But yeah, it's another one that got away.
So, Dave, through your own experience, I think you've had almost 20 years of basically trading for a living and specializing in junior mining. With respect to trying to find 10 baggers and that sort of thing, what are the things that you've learned which you can tell our listeners that can help us all find and hold on to 10 baggers over the next few years?
Yeah, well, first of all, it's a lot of due diligence. You have to get together with these management teams, form a relationship, and make sure that these management teams are serially successful. They've done this before. They have a lot of skin in the game, and ask them how much they paid for their shares before you buy anything. And once you establish this relationship, they'll be very candid with you. And as long as they're aligned with their shareholders, they have a very good project. It's got blue sky potential. It's in a really good jurisdiction. They keep their share structure tight. That'll raise the odds of you having a 10-bagger in their stock.
All right, I love that information. Now let's get back to 10 baggers here and now. So you think that, just to reiterate, because I think you already said that, you think that you would look at more of the development optionality side as the best area to find 10 baggers over the next 2 years?
Absolutely, yes. Because I'm of the feeling that the worst downside potential here for this correction is 1375 to 1400. I still think that's a possibility. I think the odds are decreasing of that happening, but I still think that is a possibility. We have to keep that in the back of our minds. And if that does happen, it's the optionality plays that will get hit the worst, especially if it happens during tax loss season, which is right around the corner here. And as a matter of fact, tax loss has already been taking place in a lot of these base metal companies. So keep an eye on, obviously, on the gold price and optionality plays, because there are a few that will begin to move strongly higher once the market begins to price in a $1,500 floor. The market hasn't priced that in yet. And so a lot of these optionality plays have been selling off here. So just be mindful of the gold price. Be mindful of the market atmosphere around these psychological levels of 1,500 and possibly 1,400. And like I said, you got to factor in tax loss selling season. And if you have a watch list, and there's a few of these optionality plays on the watch list, and you see a fishing line sell off in one of them with a big volume spike, that's usually a sign of capitulation in it, and you can begin to accumulate the stock.
Okay, before you give us a name or two, let's talk about like potential metals prices and how and what prices may be needed for these optionality plays to reach that 10-bagger threshold. Gold, I mean, assuming gold can have a successful retest of its breakout, or it continues to consolidate here and eventually trends to 1,800 or 1,900, is that kind of the level that you're looking at over the next 12 to 18 months? And also, what potential upside level are you looking at for silver over the next 12 to 18 months?
Oh, yeah, sure. Well, Jordan, 1550 is a very, very strong resistance level, and it makes sense that it is a strong resistance level, as it was very strong support back during the last bull market. I vividly recall selling a large percentage of my miners once the gold price hit over 1,900, but the miners that I did keep, I remember saying to myself, boy, if that 1550 level ever gives way, I'm going to have to be selling a lot more of my mining positions, because that level was tested a few times in about a 2.5-year time period. And then once it gave way in early 2013, the bottom just dropped out of the sector and ushered in that brutal bear market. So I think once we have a weekly close above 1550, I mean, then you're going to start to see a lot of these juniors really become more bid higher, because a lot of them are still being sold here because people just don't believe in this move. I mean, there's been so much angst in the sector during this bear market that all these moves are not believed in, and capital markets haven't opened up yet because they themselves are waiting for a couple of quarters of the gold price being at least above 1,400 to start seeing these solid returns, which we're starting to see now in the third quarter. But I digress. I've probably gotten away from what you asked me. But anyway, as far as silver is concerned, I still think there's a possibility that it could test its 50-month moving average, because that was a pretty strong marginal line of resistance since it broke its 50-month moving average back in early 2013. It's run up against it countless times and hasn't been able to break above it until recently. And I think there's a possibility it can come back and test that. But I think once the silver price has a solid $20 floor, then you're really going to start to see these silver juniors and miners move.
Yeah, but a solid $20 floor, just to follow up on silver. I mean, silver is still a fair ways below that. I mean, it's fairly close, but it's not. It's more than $1 or $2. So I guess what you're looking for is eventually a move above 20, and then it's able to hold above that, like on a monthly basis. Is that Is that what you're speaking of there?
Yeah, I mean, I'd really like to see that take place, but I think before that takes place, you're going to start to see some of the junior silver miners and developers will telegraph that move once they start to move higher. There's one that I use as a bellwether for that to take place, and that's Bear Creek Mining. And the past few weeks, it's gone up over 30%. And the stock is usually telegraphed a large move in silver in either direction. I mean, before the silver price breaks down, the stock breaks down. Before the silver price pops higher, the share price pops higher. So it appears as though it's going to make another 52-week high this week, while silver is still depressed and most of the silver stocks are still depressed. So if you start to see these silver miners move higher before the silver and the gold price begin to break out, that's a pretty good indication that it's about to happen.
Yeah, just another follow-up on that. I know you're watching this, but SIL, the silver stock ETF, that has been performing. That's been outperforming GDX and the gold stocks, and especially in the last week or two, it's been much stronger. So that's a good sign. And remember back before we had that huge move in the second half of 2010, you remember how Silver Wheat and some of the other silver stocks started to go higher before we had that massive move in silver. So that's a great point about how we could see something like that happen again. But before you give us a name or two, so do you think that as far as optionality, it's going to be easier to find 10 baggers in the silver stocks versus the gold stocks, or is it just kind of 50-50 for you?
Oh, absolutely. I mean, at the recent Beaver Creek show, which I was sorry to see you not there, Jordan. I mean, usually you go to that with me, but it was a really interesting one because this time it finally took place in somewhat of a bull market. But what capital markets have been looking for is the next Silvercrest story, because there's just not that many attractive silver plays out there. So, I mean, Silvercrest, as you know, has gone from like 10 cents to $5 or $6. So they're looking for that. And getting back to something like Bear Creek, which is an optionality play. I mean, their Karani project needs a solid $20 floor to be economic. So, yeah, absolutely. If you can find a silver junior that has, a high margin potential contained in a district scale sized land package that would have blue sky potential in a safe jurisdiction, there's just not too many out there. If you could find one that has that potential, that could be a quick two-bagger sooner than a lot of these gold optionality plays.
Okay, so before we close, Dave, are you willing to share a name or two that you think could be a 10-bagger over the next 12 to 24 months?
Sure, I can give you one. There's one in my favorite jurisdiction in the Abitibi on the Cadillac Break. They're called Monarch Gold. And it's an interesting company. Yeah, over the past few years, they've assembled one of the most impressive stable of projects of any company in Eastern Canada. I mean, they went from just having one project when I first met them at PDAC a few years ago to now they own a producing mine, 2 mills, and now they just acquired their 5th advanced project covering over 300 kilometers with a total M&I resource of over 3 million ounces of gold. And the market is valuing that gold in the ground at less than $15 an ounce right now. And it's one of the best jurisdictions in the world. So a company like that, but like I said, I mean, it is an optionality play. I mean, their Wasamac project, which they're trying to get financed right now, it needs a solid $1,400 gold price, I think. I mean, the numbers are really good. At $1,300, it's got a 522 million NPV and a nearly 24% IRR pre-tax at $1,300 gold. So I think a solid $1,400 gold price it would do the trick. And like I said, the capital markets are really tight right now, especially for optionality plays. So insiders have been buying the stock recently, which also tells me that they're not close to a deal, because they would be blacked out if they were close to financing the project. So it's very cheap to acquire right now. And if you feel the gold price is not going to break this consolidation area below 1480, then I would be accumulating a full position now. But if you believe the gold price can eventually go down to that 1375, 1400 level, then maybe accumulate a half position, and then which is where it's trading around now at about 22 cents. And I think the downside could go down to about 15, 16 cents. There's good support there, but still, this is very cheap to acquire this stock. And although they have over 200 million, like 230 million shares out, I think Alamos owns 18%. Hecla just picked up 12 million shares with as they sold their a project to them. Rob McEwen owns 5%. And the retail float is only about 28% of that 236 million out. So this is a company that you can acquire at these levels and basically stick in a drawer and wait for the gold price to get above $1,500 before it starts to move, or that Wasamac project gets financed or JV'd or something like that. I do own shares. I do cover it in my newsletter as well.
All right. Well, thanks so much, Dave, for all that info and that disclosure. And yes, full disclosure, Dave owns it. I may or may not own it. Dave and myself, if we own it, we could sell it at some point in the future. We could buy more. So all those things are possible. Bottom line, this is for informational, educational purposes only. Please go to their website, do your research. Remember what Dave said, talk to the company, build a relationship with management, and you'll be able to better understand it. Dave, before I let you go, please give out your website and tell us how listeners can follow you and subscribe to your service.
Sure. The website is www.juniorminerjunky.com. And I write a weekly column for Kitco each week, comes out every Friday. You could find me there. And although my service is full right now at 250 members, there is a waiting list. So I do have cancellations from time to time. So just put yourself on the waiting list, and thanks for your interest and your patience.
All right, Dave. Thanks so much for joining me today for episode number 2 of the 10 Bagger Podcast. And I hope we can have you back in the future if you have another 10 Bagger pick that you're willing to share.
Sure. Anytime, Jordan.
Thank you for listening to the 10 Bagger Podcast, presented by the Daily Gold. For premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.